Good afternoon to all. We are delighted to welcome you all to yet another insightful webinar on the important topic accounting of leases organized by the Accounting Standards Board of the ICI. Today we have with us C. Alok Garg, who is the eminent speaker for today's session. A warm welcome to you, sir. Now I would like to give a brief introduction of CA Meenal Khemka, who will be moderating this session. CA Meenal Khemka is a qualified chartered accountant with over a decade of post-qualification experience. She is also a DISA qualified professional from ICI with over 6 years of expertise in information system audit. She is a practicing chartered accountant with wide-ranging experience in income tax computation, TDS filing, tax audits, trust registrations, and representations before tax authorities. With this, I would now request Meenal ma'am to start the webinar by giving a brief introduction of eminent speaker CA Alok Gurji.
Sir,
Thank you, sir. Good afternoon, everyone.
Meenalji, we have our chairman, Dr. Sanjeev Singhal also with us for this webinar. Sir, a warm welcome to you too. So we have our speakers, CA Dr. Alok Garg and Meenalji here.
Yeah, sure. Thank you, Shalini. Thank you, and very good afternoon to all friends. It's indeed a pleasure to welcome you all at our webinar series. And today, our topic is leases. And to take this session, we have my esteemed friend Alok Garg, CA Dr. Alok Garg. Alok is from industry and doing a human service for the profession. He has authored many books also. And the moderator is Meenal Khemka, again a friend of the profession. Friends, it's our endeavor to bring the different topics to all of you for your knowledge enhancement. The same thing we have been doing in the Auditing and Assurance Standard Board earlier when I was the chairman for 3 years. And now I have been given the responsibility of being the chairman of Accounting Standard Board. So now we are starting a series of the webinars. And there are various topics which we'll be taking, and you are free to suggest some topics in the chat box also. The idea is that we deal with the basic overviews as well as the intricacies of the standards. Some of the intricacies will be taken by our faculty, and some you can ask through your questions in the chat box or in the space which is mentioned therein. And if any of you want to be involved in the activities of Accounting Standard Board, be a faculty or be a moderator, please do write to us. We have many initiatives. We are preparing the education material, question bank, taking webinars, seminars, etc. So please feel free to get associated with the Accounting Standard Board. It is your institute. It is your Accounting Standard Board. Thank you very much.
Meenalji, you may please
Yes,
take it over from here. Thank you.
Good afternoon, everyone. Our topic of the webinar is accounting of leases, and our speaker is Dr. Alok Kumar Garg. Let's have brief introduction of our speaker. He is a CA and CS having a long-standing industrial experience of more than 18 years in the field of finance and accounting. He is currently working as an associate vice president as a financial reporting and internal audit head with a large listed company. He is a renowned author with 4 comprehensive books in his credits. He has recently launched third edition of his iconic book Treatise on INAS and Treatise on Schedule 3, which is one of the largest and best-selling book in Indian accounting standard and Schedule 3, and highly appreciated by the reader. He is a prolific speaker, having delivered more than 800 lectures on Ind AS, IFRS, IGAAPs, Schedule 3, and auditing standards at various national and international platforms. He has been a special invitee to prestigious accounting standard Board of ICAI for the previous year 2019 and 20 and 2020 to 21. He has been honored with National Education Leadership Award awarded by Delhi University and Indian Accounting Association. He has been accounted as a subject matter expert in the field of financial reporting and multiple times during the professional stints. He has contributed extensively in academic and professional activities at esteemed institutions including ICAI, ICSI, and various universities. He has eminently contributed in development of study material for CA final students and educational material for the member of ICAI. He has also reviewed the accounting standards drafted by ICAI for Bhutan. His article has been regularly published in leading print and online journals. He has been consistently rated as a best faculty at ICAI and other firms. He, he is instrumental in giving back to the society and has mentored many students and professionals. Now I request to our speaker to start their session.
Thank you,
Alok sir.
Meenal ma'am, for the detailed introduction. I hope I am audible. I'm clear and loud. Am I audible?
Yes, sir.
Yeah. So first of all, good afternoon, Sanjeev sir, and thanks to you for giving me this opportunity and entire ASP team, Shalini ma'am and others, for again giving me the opportunity to share my experience on this important topic. This leases is very close to my heart in terms of my work experience also. So prior to aviation, I was with telecom. And in telecom, leases plays a very important role because most of the towers are on leases. Or not only most of the towers, so I was part of Indus Towers Limited. Prior to Indus, I was part of Bharti Infratel Limited, which was merged with Indus Towers subsequently. So we have more than 2 lakh towers which were entirely on leases. Right now, I am part of Indigo Airlines where again, the aircraft are largely on leases. So for the aviation industry, for the telecom industry, this leases word, this leases subject is very, very important, right? There are so heavy lifting of leases in their balance sheet. So let me share my screen and please confirm if my screen is visible to everyone. Please confirm. Is it visible? Okay. Yes. So friends, let me give you a background of Ind AS 116 leases. Right? First of all, I'll talk about the regulatory framework of leases in India. Right? So in India, we have 2 set of standards. One, accounting standards. Second one is Indian accounting standard, Ind AS. Accounting standards are manufactured in India, marketed in India, and packaged in India. It is our own indigenous standard. Right? If I talk about Ind AS, Ind AS are the converged version of IFRS applicable to India. So Ind AS are manufactured outside India in terms of IFRS, but packaged in India, marketed in India. Why? Because Ind AS are the modified version of IFRS, converged version of IFRS applicable to India. So we have inserted some carve out, carve in, and some removal of option, and then we drafted our Ind AS from IFRS. So we have Ind AS and we have accounting standard. In accounting standard, we have AS 19 on leases, right? Where it talks about how to account for leases in the books of lessee and in the books of lessor. In Ind AS, it is Ind AS 116, okay? Which also talks about how to account for leases in the books of lessees and in the books of lessor. In leases, there are 2 parties. One is lessee and one is lessor. Lessee is a tenant and lessor is a landlord. Okay. Friends, this Indian accounting standard was notified on 16 February 2015. Okay. So it's been more than a decade when we notified our Indian accounting standard. Okay. And in 2015, when Ind AS were notified, at that point of time, there was Ind AS 17, which was taking care of lease accounting. Okay. Friends, then subsequently on 30th March 2019, again a notification came, and on 30th March 2019 notification, Ind AS 17 was deleted and Ind AS 116 was introduced. Ind AS 116 was notified. Okay. So this Ind AS 116 was made applicable from 1st April 2019. Friends, it's been around 6 years and around 100 days, 6 years and 98 days when this Ind AS 116 was notified. 6 years and 98 days. But I can tell you still, members are not well educated, or I would say members are not much aware about the intricacies of Ind AS 116, right? So this Ind AS 116 itself is a very important, very detailed, and I would say kind of a complex standard in a series of the complex standard, right? So now what is Ind AS 116 and what was the objective of bringing Ind AS 116 when we had a Ind AS 17? So first of all, it's a after effect of IFRS. Okay. In IFRS 16 came. IFRS 16 had replaced IAS 17, and in line with that, we had also replaced Ind AS 17. Now the question comes, what was the objective of bringing IFRS 16? Okay. So this IFRS 16 was applicable from 1st January 2019. Okay. And Ind AS 116 was applicable from the financial year, which is 1st April 2019. Okay. So talking about IFRS 16, why IFRS 16 was important, why IFRS 16 was introduced, and what was the thought behind bringing IFRS 16. So friends, let me tell you what happened. In 2005, okay, the Securities and Exchange Commission of USA, their staff was researching on some public limited companies, on some listed companies, and found that the $1 trillion worth of leases were sitting outside the balance sheet, right? And why this issue came, let me tell you. So let's say if I have to buy a car, okay, so I have two options. One, I'll use my own money and I'll go and I'll purchase the car, right? The car will come into my balance sheet, my cash balance and bank balance will get reduced. Number two, I will take the loan and I'll get the car. So my loan, my liability is sitting on the balance sheet, on the liability side of the balance sheet, and my car, which is an asset, property, plant and equipment, will be sitting on the asset side of the balance sheet. Okay. So I have to pay EMIs. I have to pay EMI, okay, regular installment I need to pay for meeting my loan obligation. Now I am a company and I don't want to make my debt equity ratio, I don't want to make my solvency ratio bad, okay, I don't want to get my ratios impacted. So what I'll do, instead of buying a car on loan, what I'll do, I will get the car on a lease basis. So what happened? If I'll get the car on lease basis, of course, this car will be not in the balance sheet, and resultant liability will not be on the balance sheet. Correct? If it is an operating lease, I'm talking about pre-IFRS 16 scenario or pre-Ind AS 116 scenario. For example, my non-cancelable lease agreement is 5 years. For example, my lease commitment is for 5 years, but if it is an operating lease, neither car will come on my balance sheet nor the loan liability or lease liability will come on my balance sheet. Having said that, I have entered into a contractual commitment to pay a lease rental equivalent to 60 installment equivalent to 5 years. Okay, so I have a long-term liability, but this long-term liability is not looking at the balance sheet, right? And instead of EMIs, I'm paying regular rentals on a monthly basis. So EMIs are converted into monthly rentals, but nothing is there in the balance sheet. Okay. So this is how the companies were camouflaging with their assets and liabilities, with their situations, while they were heavy lifting of these leases in their balance sheet. Okay. For example, telecom companies, for example, IT company. And with a great example is aviation companies, right? And aviation companies whose bread and butter is aircraft, right? So they are using aircraft, they are flying aircraft, and they are earning money. But those aircraft were not sitting on the balance sheet of aviation companies. Why? Because these companies have taken these aircraft on operating leases. Okay. And friends, one of the important, and I would say one of the famous quote, which was given by Sir David Tweety somewhere in 2008, when he was traveling for a conference and when he boarded an aircraft, right? So he was just thinking whether this aircraft is on an airline balance sheet. So when he saw the balance sheet of that airline company, he didn't find that aircraft. Then he asked the CFO, the aircraft which I have boarded, it is not there in your balance sheet. How come it possible? Then the CFO explained, sir, these aircraft are on operating leases basis. Okay. And hence these aircraft and resultant liability are not on our balance sheet. Then Sir David Tweety asked, is it a short-term lease? I mean to say, is it for 6 months, 9 months, 12 months, or is it a long-term lease? CFO explained, sir, our model is we will take it on a lease basis for 10 year, 15 year, 8 year, whatever it may be, right? So then Sir David Tweety thought, my God, the biggest asset, the underlying asset on which this entire airline company is running, these aircraft on which passengers are boarding, passengers are flying, these aircraft are not on the balance sheet of airline companies. And you know what he told that point of time? He told, one of my great ambition before I die is to fly in an aircraft which is on an airline balance sheet, right? He told that one of my great ambition before I die is to fly in an aircraft which is on an airline balance sheet, right? So his vision, his thought process, and FASB research. So all these have initiated a research, a study on leases model on accounting, right? And with that, Financial Accounting Standard Board of USA and International Accounting Standard Board, which is an organization who developed IFRS, they started a joint project and they have made a major overhaul in the accounting for leases. And then they have notified, they have introduced IFRS 16 and USA Accounting Standard Codification 842. ASC 842 was introduced, which has replaced the earlier accounting standard codification on leases standard. In IFRS, this IFRS 16 came, and IFRS 16 says that you need to create a right of use asset in your balance sheet, and you need to also recognize a lease liability in your balance sheet, just like a finance lease. So you must be aware about the finance lease concept in Accounting Standard 19. You remember we had two kind of leases, operating lease and finance lease. In finance lease, what we were doing? In finance lease, we were capitalizing finance lease receivable. Okay. Sorry, not finance lease receivable. From the lessee perspective, we were capitalizing the leasehold asset and we were also crediting the lease liability. Okay. Which is on the basis of present value of future lease rentals. Likewise, in IFRS, US GAAP and Ind AS 116 also, we have decided, it was finalized that right of use asset will be capitalized and the lease liability will be credited in the liability side for an amount equivalent to present value of future lease rental. I'll speak more about this, okay? Friends, and International Accounting Standard Board had introduced IFRS 16, replacing International Accounting Standard 17 and related interpretations effective from 1st January 2019. While the standard was issued in 2016, but globally it was applicable from 2019. And in line with the introduction, in line with the notification of IFRS 16, the Ministry of Corporate Affairs of India, they have also notified Ind AS 116, which had replaced Ind AS 17, effective from 1st April 19 on 30th March 2019. Okay, so this is the journey of IFRS and Ind AS 116. And you know, the magical impact of IFRS 16 or Ind AS 116. I was working in a company, a telecom company, right? A telecom tower company. So on 31st March 2019, this company was a debt-free company. On 31st March 2019, this company was a debt-free company. Okay. So I was working on 31st March 19 till late night because of the year-end closing. And when I left for my home and I again went to my office on 1st April 2019, you know, just over a night, more than thousands crore of debt has come into my balance sheet. So the debt-free company has become a debt company. Can you tell me how come it was possible? How come a debt-free company was converted into a debt company just within 10 to 12 hours? How come it is possible? Yes, this magical impact was due to introduction of Ind AS 116. This Ind AS 116 was applicable from 1st April 2019. Up to 31st March 2019, Ind AS 17 was applicable, and in Ind AS 17, there was no concept of capitalizing right of use asset and crediting lease liability. There was no concept. But in Ind AS 116, the concept of capitalizing right of use asset and crediting leasehold obligation came into the picture, which has resulted into thousands of crore of asset and thousands of crore of lease liability in the balance sheet, because this was a telecom tower company and all the towers were taken on leases, either on the land leases or either on the rooftop leases, right? So this was the magical impact of IFRS 16, or in India it is Ind AS 116. Right? Just because of the introduction of this Ind AS 116, so many debt-free companies got a debt. Many debt companies' debt has increased. So now the off-balance sheet financing, the off-balance sheet leases has come into the balance sheet. And now you can look at that, what is my asset in terms of right of use and what is my lease liability in terms of my committed liability, in terms of liability relating to the long-term lease agreements, which are non-cancelable agreement, okay, which are non-cancelable period, okay. So this is the background of Ind AS 116 and IFRS 16, okay. Now what had changed, my dear friends? Accounting for lessee had changed significantly. This Ind AS 116 has changed entire gamut of accounting for leases, for lessees, right? For lessor, the impact is not that way. So impact is not much in comparison to the old standard, but in terms of the lessees accounting, the accounting has changed drastically, okay? Moving off balance sheet financing to on balance sheet for lessees, right? Now the asset and liabilities came on the lessee's balance sheet, which were not there in the lessee's balance sheet. Now lessee will capitalize all the leases except for short-term and low-value leases. There are only two exemptions which is available, and these two exemptions relate to short-term leases and low-value leases. So the standard setting body told that whatever leases you have entered into, you have to capitalize all the leases. We are giving you exemption only for short-term leases and low-value leases. I will explain that. No substantial change in accounting for lessor. Disclosure have been also enhanced. Okay. So friends, this new standard, which is now a very old standard, right? This old standard, which is the applicable standard on leases, had led to a consistent, comparable, and understandable financial information across industries, right? And this leases is a prominent source of financing also. Okay. Yes. Now, what is the change? If you need to look at the pictorial presentation of this change, you can find that earlier in Ind AS 17, only in case of finance lease, the assets are there. Okay. The assets are there in terms of finance lease, but in terms of operating lease, there are no asset. But in terms of Ind AS 116, the right of use asset will capitalize for all the leases, be it finance lease, be it operating lease. In terms of liabilities, in finance lease, there is a liability. In operating lease, there is no liability on the balance sheet. But in Ind AS 116, doesn't matter. It is an operating lease or finance lease. There is no classification. This classification of operating lease and finance lease has gone. So now for all the leases, you need to capitalize right of use asset and you need to credit your leasehold liabilities. Okay. So friends, in terms of Ind AS 17, the old standard, there was nothing in off balance sheet in terms of finance lease, but in terms of operating lease, the entire operating lease impact has been shown as a notes to accounts, as a off balance sheet item. But in Ind AS 116, since all the leases came on the balance sheet, so nothing left as a off balance sheet item. Okay. So this is the balance sheet impact for Ind AS 116. The P&L impact earlier in terms of finance lease, there was a depreciation and there was a finance cost. But in terms of operating lease, the rental has to be charged to the P&L. But now for all leases in terms of Ind AS 116, like if I talk about telecom companies, if I talk about aviation companies, largely it is operating lease. So for the operating lease, earlier rental was charged to P&L, but now instead of rental, it has moved to depreciation on right of use asset and finance cost on leasehold liability. Means the EBITDA has moved. The EBITDA has improved. Why? Because there is no rental. There is no rental, right? Okay. So this is the impact in terms of P&L. Now, what is the cash flow impact? In cash flow earlier, the rental cost was what? The rental cost was cash outflow from operating activity in terms of operating lease. But now, in terms of cash flow from operating activity, whatever depreciation you have charged, okay, since there is no rental, okay, only there is a depreciation in finance cost. So whatever depreciation and finance cost is there, that has to be added back from the cash flow from operating activity. And cash outflow from financing activity, it will go up, right? So whatever lease payments you are making, whatever interest you are paying, that will become part of cash flow from financing activity. So cash outflow will go up. Okay. So this is the cash flow impact in terms of Ind AS 116, right? So friends, this standard has highly impacted the aviation industry, oil and gas industry, retail industry, telecom and IT industry, right? They have a lot of leases in their balance sheet. Talking about the scope of the standard is applicable to all the leases, including sub-leases, except few items which is listed in this standard. Okay, I'm not reading and I'm not calling those items. You can just read those items. Exemption to the lessee. What is the exemption? And before that, my dear friends, let me tell you what is this entire accounting, right? Then you will be able to appreciate it more. So first of all, let me open my Excel file and let me share one of the practical example here. Okay, for those who want to understand how this accounting has to happen. Okay, yes. I hope my Excel file is visible to everyone. I hope my Excel file is visible to everyone. Yeah, for example, the lease rental is 10 lakh rupees every year. Okay, this lease rental is 10 lakh rupees every year. 10 lakh rupees payable at the end of every year. What is my lease period? My lease period is 3 years. And this is the non-cancelable lease term. This is the non-cancelable lease term. This is the non-cancelable lease term. The discount rate, which is an incremental borrowing rate, is given, which is 10%. So discount rate is 10%. 10% is the discount. Okay. Now you need to provide the impact of Ind AS 116 on the commencement of this lease contract. Yes. So how will you compute this? How will we compute this? First of all, my years. How many years are there? 1, 2, and 3. My lease payments. Okay. What are my lease payments, friends? My lease payments are 10 lakh rupees every year. Okay. What is my present value factor? The discount rate is 10% and this payment is payable at the end of every year. So 1 divided by 1.1, right? 1 divided by 1.1. Again, this divide by 1.1. Again, this divide by 1.1. So what is my present value factor? My present value factor is 0.909, 0.826 and 0.75. What is my present value? What is my PV? My PV is this multiplied by this. Okay. So what is my present value of lease payments? What is my present value of lease payments? My present value of lease payments is 24,86,852. So this 30 lakh present value is 24,86,852, right? This is the lease payments. Now, what is the entry I need to pass? I need to pass an accounting entry of right of use asset account debit, asset debit to lease liability, right? So this is the entry which is required to be passed at the time of commencement of the lease contract, right? So this is the entry I need to pass. Now, what is the impact of this right of use asset? So how this right of use asset will become zero? How this right of use asset will become zero? Depreciation has to be charged on right of use asset. Depreciation. What is the depreciation? What is the per annum depreciation? क्या होगा depreciation? Your depreciation will be how much? Your depreciation is this divided by 3 on a straight line basis, right? This is your depreciation. So in 3 years, this right of use will become zero. This right of use will become zero. What about your lease liability? How come this lease liability will become zero? You have to prepare a lease liability schedule. Lease liability schedule. Right? The present value is 2486, but you have to pay 30 lakh. So what is the difference between 30 and 2486? Finance cost. The difference is finance cost. And let me show you. These are the years 1, 2, 3. Right? Then my opening liability, my opening balance. Okay. Then my interest cost, then payment, then closing liability. What is my opening balance? What is the opening balance? The opening balance is 2486. Okay. This is the opening balance. What is the interest cost? This multiply by 10%. Okay. What is the payment? Payment kitni karenge? 10 lakh rupees. What is my closing liability? Equal to sum of this 1735,537. In the second year, this will become the opening liability. Interest cost 10%. Just a minute. Into 10%. 10%, right? This is the payment, again 10 lakh rupee. What is my closing liability? 90,90,901. This will become the opening balance. Again, you need to charge an interest. You need to pay 10 lakh rupee. This becomes zero. Okay. This is how your right of use asset and lease liability will become zero at the end of 3 years. And what will go into the P&L? What is your P&L impact? Earlier means prior to Ind AS 116. Prior to Ind AS 116. P&L impact. So let me show you the P&L impact. Prior to Ind AS 116, rent. It was a rent. Okay. And what is the impact? Every year you have to debit a rent of 10 lakh rupees. So 30 lakh rupee will charge to your P&L. Okay. But what is Ind AS 116 impact? What is Ind AS 116 impact? Ind AS 116 impact on P&L. So what is the impact? Depreciation and interest cost. Depreciation and interest cost. What is my depreciation every year? This is my depreciation. My total cost should be 30 lakh, right? What is my interest cost? My interest cost is this one. So I will charge 24,88,852 in depreciation as a form of depreciation and 513,148 in terms of interest cost. What is my total P&L impact? My total P&L impact in the first year is 1077, in the second year 10 lakh, and in the third year 919. You can see in prior to Ind AS 116, the P&L impact was static, but in Ind AS 116, it was high in the first year, comparatively lower, and the lowest in the third year. And the total P&L impact is 30 lakh. I hope with this small example, you are able to understand and appreciate the accounting of Ind AS 116, right? This is how this accounting has to happen. This is how you can do Ind AS 116 accounting. I hope this is clear to all of you, friends. Is that clear to all of you? Yes. Very good. Great. Yes. So now I'm moving to my presentation. So this is again a very complex kind of accounting where you need to compute what is the discount rate. You need to compute what is the non-cancelable lease term. You need to check what is the lease payments, right? And this is not as simple as it looked like. Okay, this is not as simple. You have to read the contract. You have to go for the substance, that what is the substance? What are my lease payments, right? I will discuss all those aspects. So friends, with this present value accounting, discounting accounting, the standard has given you exemption at 2 places. You know what are the 2 places? The standard says that if you have entered into a lease agreement for a period of 12 months or less, right? In that case, you are not required to do this Ind AS 116 right of use asset and lease liability accounting. You can do your old accounting, simple, accounting standard wali accounting. You can just debit your rent into the P&L and credit your lessor, and you can debit lessor and pay through the bank, right? So this accounting you can continue. The only thing is, if your short-term lease means if your 12 month or less, your lease contract is 12 month or less, but there is a purchase option which is available. Okay. So in the lease contract, there is a purchase option. In that case, it will not be considered as a short-term lease. Likewise, there is a second exemption which is available. And what is the second exemption? Second exemption is on low value leases. You know what it says? It says that in an organization, don't think like a very small organization. Think like a big organization. Ind AS is applicable to every organization in terms of their applicability criteria. So let's say a company like, the big listed company, the company like Reliance, TCS, Bharti Airtel, lot of big companies are there, right? And they have a pan-India presence, even they have international presence as well. So they have lakhs of employees, okay? These companies usually also take some office equipment like refrigerator, air condition on leases. These companies are also taking laptops, furniture, coffee vending machine, printers, photocopier. These items they are taking on a leases basis, right? So these are the small items, okay? So whether the present value accounting is required in these cases, so standard has given the exemption. Standard has told that if you are entering into a lease contract for an item which is of a low value, not the rental, item which is of a low value. For example, the leases is for computer, laptop, furniture, photocopy machine, printing machine, refrigerator, air condition. So these are considered as a low value leases. Okay. For these leases, you are not required to do the present value accounting. You are only required to debit your rental and credit your landlord. Debit your landlord and credit your bank. That's all. That's all, right? Friends, is there any materiality threshold which is given for these leasehold item? Answer is no. It is not given in Indian accounting standard, but in India, in IFRS, there is a document called basis for conclusion. In basis for conclusion, the indicative threshold of $5,000 is given, which in Indian terms equivalent to around 4.5 lakh, roughly 5 lakh rupees. Okay. Yes. So short-term leases and low-value leases, these are the 2 areas where the exemptions are given. Friends, now let's discuss the lease contract. Right? And this circle is very important. What is a lease contract? So if you read the old standard means Ind AS 17, or if you read the accounting standard 19 on leases, you know what it talks about the lease contract? It says that a contract which conveys the right to use of an asset for a period of time in exchange for a consideration, right? So in our old standard, the terminology was right to use of an asset. But you know, what is the terminology in Ind AS 116? The terminology is not right to use of an asset. The terminology is right to control the use of an asset, right? So right to control the use means it is not talking about having a right to use. It is talking about, do you have a right to control the use, right? Second, it is not talking about only asset. It is talking about identified asset. So friends, these two words, control and identified, these two words have made a major impact. These two words have made a major impact in terms of accounting of leases. These two terms made a major impact in terms of accounting for leases, right? So friends, we will discuss what is the meaning of right to control the use of an identified asset, right? We will discuss what is the meaning of right to control the use and what is the meaning of identified asset, okay? And the period of time, what is a period of time? There must be a lease term, there must be a period of time. Period of time is nothing, it's a lease term. In exchange for a consideration, what is meant by consideration? Consideration means lease payment. So friends, it should be a contract. In a contract, there must be two or more parties who are the lessor and the lessee. There must be right to control the use of identified asset for a period of time in lieu of a consideration. So we will discuss these four terms in detail. Number one, what is meant by identified asset? What is meant by right to control the use of an identified asset? What is meant by period of time? I mean to say lease term, and what is meant by lease payment. We will discuss these four aspects one by one. Friends, now we will discuss what is meant by identified asset. What is meant by identified asset? Simple terms, identified as asset is an asset which can be clearly identified. Okay. Friends, the standard says that for an asset to become an identified asset, it has to be explicitly or implicitly, it has to be explicitly or implicitly mentioned in the contract. Okay, it has to be explicitly or implicitly mentioned in the contract. The contract could be oral, written, right, verbal also. Explicitly written in the contract, what does it mean? For example, for all the property related agreements, for all the property related agreements, you must have seen that the house number, flat number, property number, right? What is your landmark? Everything is given, like the property number A802 XYZ society near this tower, okay? This Gurgaon pin code number 122001. So everything is given, right? So this is explicitly identified in the contract. What is implicitly identified in the contract? For example, the lessor has a single asset, for example, right? The lessor has a single car. Lessor has a luxury car, or lessor has a private jet, and he has leased that jet, right? Instead of writing the tail number of that private jet, instead of writing the registration number, tail number, make and model number, in the contract it was written that the private jet was leased from A to B, and that lessor has only single jet. In that case, it is implicitly defined in the contract that this is an identified asset. Okay. So number one, the asset has to be explicitly or implicitly defined in the contract. Number two, very, very important, and the supplier should not have. Supplier means, friends, in Ind AS 116 or IFRS 16, you will find the word supplier customer. The supplier word is used for lessor, and the customer word is used for lessee. Okay. So don't think about when it is talking about a supplier or customer, it is talking about Ind AS 115 revenue from the contract with the customer, right? So the word supplier and customer is used. So the second, the lessor should not have a substantive right to substitute the asset throughout the period of use. What does it mean? Sir, explicit or implicitly defined in the contract, we understood. But what is the meaning? What is the meaning of the lessor should not have a substantive right to substitute the asset? What is the meaning of this, sir? The meaning is the lessor should not have a practical ability to replace the asset. Lessor should not have a practical ability to replace the asset. Sir, what does it mean? Lessor should not have a practical ability to replace the asset. What does it mean? For example, the company has entered into a contract with a transporter, right, who is the supplier of a cars. And the company asked that I need these 4 cars. I need these 4 BMW, okay, which should be make and model of 2025. Then the supplier agreed The vendor agreed. The vendor told that, okay, I will give you these BMW cars. And the rate was also agreed. The rate was defined that the supplier or the lessor will charge almost 5 lakh rupees per month for these 5 cars. Now, what happened? Now, after 3 months, and in the contract, it was written that the lessor can replace the car with some other cars. The lessor can replace these BMW car with some other cars. So after 3 months, there was a new customer which came to this lessor or a transporter who is ready to pay good price, which is more than the existing customer for this BMW. So what this lessor has done, he has replaced these cars from the existing customer with the old cars, and these cars he has given on a lease to the new customer, new lessee. Right? It means the lessor has a right to replace these cars for his own economic benefit, right? It means the lessor has a right to replace these cars for his own economic benefit. By giving this car on a lease basis, the lessor is getting benefited economically. Right? Because he's getting a good money out of that. So friends, in this case, the lessor has a substantive right, means practical ability to replace the asset, and this practical ability of replacing the asset gives the benefit to the lessor also. Right? Second example, the car got damaged and now the lessor has replaced this car with the old cars because these cars require repairs. Okay. So in this case, when the lessor is replacing these cars because the car got damaged, the car met with an accident. So by replacing these cars, whether lessor is getting any benefit? Friends? Tell me, whether lessor is getting any benefit? Answer is no. इवन लेसोर का तो नुकसान है ना, उसको तो रिपेयर की कॉस्ट बियर करनी पड़ेगी. लेसोर का तो नुकसान है. सो बाय रिप्लेसिंग दिस कार, लेसोर will not have any economic benefit. Right? So in this case, in the second case, it will not be construed that lessor has a substantive right to replace the asset. So it is a protective right. Okay. So in the contract, it says that whenever the car requires any repair, or when the car got damaged, or when the car requires service, in that case, the lessor will take these cars and the lessor will replace these cars with some other cars, right? So these are the protective right. In these cases, lessor is not getting any economic benefit. Okay. Is that clear? Yeah. So these are not a substantive right. So for making an asset as a identified asset, the lessor must have a substantive right to, the lessor should not have a substantive right to replace the asset, number one. Number two, the asset has to be explicitly or implicitly defined in the contract. Is that clear? अगर लेसोर के पास substantive right है replace करने का, then it will not become a identified asset. Okay. And what is the meaning of substantive right to substitute the asset? Means lessor has a practical ability to substitute the asset, replace the asset, and lessor is getting economically benefit. Lessor is getting benefited economically by replacing the asset. Okay. Example, the lessor has a warehouse measuring 10,000 square feet area. The lessor allocate 1,000 square feet to each lessee who occupied the space on rental basis and identified each of the 10 blocks as A, B, C, D, and so on. The lessor has a right to allot any 1,000 square feet area to the lessee during the lease period, and no any area is specifically earmarked on to any lessee. Simple. The lessor has a warehouse which is 10,000 square feet, and there are 10 blocks of 1,000 square feet each, and there is no block which is earmarked to any lessee. Okay, so the lessor can provide any area to any lessee. Right. So in this case, the lessor will have a substantive right to substitute the asset, right? It has a substantive substitution right, as if a lessee has got A area, it might be changed to other area during the lease term as per the discretion of the lessor. Okay. And hence it will be considered as a there is a substantive substitution right available to the lessor, and this will not become an identified asset. So if it will not become an identified asset, then what will happen? For example, you are the auditor of a company who has such a contract, who is a lessee. And this company is capitalizing the right of use asset, and the company is crediting the lease liability. Okay. And this company wants to improve the EBITDA. So as an auditor, you will not allow that company to do this accounting of right of use and lease liability. Why? Because this is not meeting the definition of identified asset. Why? Because the lessor has a substantive substitution right. And since it is not meeting the definition of identified asset, it is not become a lease contract, it become a service contract. And when it become a service contract, so the expense has to be accrued on an accrual basis on a monthly basis. Means the rental has to be accrued on a monthly basis. The rental expense will come. Is that clear? Okay. The second example, standard says that a capacity portion of an asset is not an identified asset unless it is physically distinct. For example, a floor of a building. A capacity or other portion of an identified asset that is not physically distinct, for example, a capacity portion of a pipeline, is not an identified asset unless it represents substantially all of the capacity of the asset and thereby provide the customer with the right to obtain substantially all of the economic benefit from use of the asset. Have you seen the trucks of HP, Hindustan Petroleum, BPCL, the tanker? Have you seen the tanker of Mother Dairy, milk tanker, gas tanker, liquid petroleum gas, petrol, diesel? You must have seen the tanker. These tanker has a capacity. For example, a tanker has a 1000 liter capacity, for example. Okay. So I am the petrol pump, let's say. Okay. And Shalini Zindal ma'am, she also has a petrol pump, for example. So we too have a petrol pump. We have entered into a contract with a tanker supplier that please transport. So for a full year, you have to transport the petrol. 50% of the capacity I will use and 50% of the capacity will be used by Shalini ma'am. Okay. So from IOCL or BPCL, the tanker was full. It carries 1000 liter. It delivered 500 liter to me and 500 liter to Shalini ma'am. Okay. So we have hired the tanker on a lease basis, for example. Friends, when this tanker was full, can I distinguish which the first 500 liter, the top 500 liter or the bottom 500 liter, what pertains to me? Can I distinguish whether the left side of the 500 liter or the right side of the 500 liter pertains to me? Or whether the middle of the 500 liter pertains to me and the left and right pertains to the Shalini ma'am? Answer is no. Means if an asset has a capacity portion, and it is not physically distinct, in that case, this will not be classified as an identified asset until and unless the customer is obtaining substantially all of the economic benefit. Until and unless the customer is obtaining substantially all of the economic benefit. For example, if I will say, I will take more than 90%. So substantial means more than 90%. I will take more than 90% of the capacity. Listen, you have to transport my petrol for 900 liter on a daily basis. Okay. In that case, I can say that yes, it becomes a lease contract. Why? It becomes an identified asset. Okay. So if there is a capacity portion, okay, and it is not physically distinct, then it will not be classified as identified asset until and unless it represents the whole of the capacity, substantially major capacity, right? So let me discuss one of the very good case study, case study from ICI study material. Okay. And I'm sharing a Word file where I have compiled some case studies. Yes. Just allow me a minute. I am sharing that case study. I hope this Word file is visible now. Identified asset. Okay. Entity X is one of the largest PNG gas provider of the country, enters into an arrangement for 20 years with entity Y for using 70% of the capacity of a gas pipeline. Is it the substantial capacity? Answer is no. So entity X is one of the largest PNG gas provider of the country, enters into an arrangement for 20 years with entity Y for using 70% of the capacity of a gas pipeline. It is a pipeline, and in the pipeline, out of 100 capacity, 70% of the capacity was taken on a lease by this entity. The quantity of the gas which is to be sent in the pipeline is decided by entity X, and it is the entity X who will decide, right, how much quantity of gas has to be transmitted in this pipeline. Entity Y makes all decision regarding operation and maintenance of the pipeline, and entity Y is taking all decision regarding operation and maintenance. Entity X pays a fixed capacity charge per month and a variable amount which depends on the quantity of gas transported. This entity X being a lessee, it pays a fixed consideration and a variable consideration. Entity Y being a supplier, entity Y may allow third parties to use the remaining unused 30% capacity only. This line is very important, my dear friends. And at times, being a practitioner, being a people from industry, we oversight, or we don't focus on these kind of lines in the contract, right? Entity Y may allow third parties to use the remaining unused 30% capacity only if entity X refuses to utilize the same. That is, entity X has the right of first refusal. What does it mean? Entity X is already using 70% of the capacity, and even for the next 30% capacity, who has the first right of refusal? Entity X has the first right of refusal. Means अगर entity X मना करेगी तभी वो third party को दे सकते हैं, right? So entity X, if wants to utilize, entity X has to be given the opportunity first. If not, then only others will be given the opportunity. So substantially, all the portion, going by the substance, all the portion is utilized by this entity X, right? They have the right for 100%, and hence it become an identified asset. But my dear friends, if one more line has been written in this contract, then what happened? And I'm telling you the line. So if instead of entity X has the first right of refusal, it was written that the first offer of using 30% should be given to entity X, and entity X has to pay double of the amount what is prevalent in the market. In that case, while the first right of refusal is given, but they are charging double of the prevalent rate in the market. So whether entity X will utilize? Answer is no. Double पैसे में कौन utilize करेगा? Why double rent will be? Why entity X will pay the double rent, right? So while first right of refusal तो दे दिया, but पैसे भी double मांग रहे हैं. In that case, it will not be considered as that this entity has a substantial right to use all the capacity, right? Okay. Is that clear? Very good. Yes. Now I have some example from airport. Okay. You must have checked into the airport and you must have seen the airline counters on the airport, right? So friends, let's discuss this example. Airport authority has provided the 5,000 square feet space to ABC Airlines in front of its gate number 5. The location can change only in case any regulatory changes will come for space allocation. So when the lessor will change the location, the lessor will change the location only when the regulatory changes will come for the space allocation. So whether this 5,000 square feet in front of gate number 5, whether it is explicit in the contract, answer is yes. Whether substantive right to substitute is there, answer is no. Why? The change will only happen not for the benefit of the lessor, only when the regulators will allow, only when the regulator will demand. Okay. So outcome, it is a identified asset. So this is the outcome. Second, airport authority has provided the 5,000 square feet space to ABC Airlines in front of its gate number 5. Yes, explicit in the contract. The authority can change the location in future as per its discretion. Tomorrow, Cafe Coffee Day came. Tomorrow, Hamleys, Reliance Hamleys came, and they told that I will pay you double rent if you will give me the space in front of gate number 5. So airport authority, as per the contract, they can change the location as per the discretion. So they change the location. So whether substantive right to substitute is there, answer is yes. So outcome, it is not an identified asset. Then it means Ind AS 116 is not applicable in this case, but in this case, Ind AS 116 is applicable. What is meant by right to control the use of an asset? Friends, we told that in a lease contract, there are two parties, two or more parties. There must be an identified asset and there is a right to control the use of an identified asset. What is meant by right to control the use of an identified asset? Friends, let me explain with the help of a layman language example. So I have a car. I have a Skoda car. I was traveling to Singapore for 5 days. My friend came to me and he asked, Alok, can you give me your car? I said yes. And you know what I've told him? I told him that, listen, don't drive this car at more than 80 km/h speed. So don't drive more than 80 km/h speed. Number 2, don't take this car outside Delhi NCR. Don't take this car to Mathura, Vrindavan, Rishikesh, Haridwar. Don't take this car. Number 3, don't use this car after 8 p.m. Number 4, please get the fuel for this car only from XYZ petrol pump. Number 5, you can only use this car for maximum 4 passengers. While it is 5-seater, but you can use this car only for 4 passengers. Okay. And always park the car in a authorized parking. So I have given so many instructions to my friend for using that car. Tell me whether my friend, I'm asking you 2 questions, whether my friend has a right to use of that car. Number 1. Number 2, whether my friend is controlling the right of use of that car. Whether my friend has a right to use, whether my friend has a right to control the use. So question number 1, yes, my friend has a right to use. I have given him the key. The car is with him for 5 days. Uske paas right to use hai. But who is controlling the use? I am controlling the use. I am controlling the use of that car, right? So friends, when an asset will become a lease asset under Ind AS 116 from the perspective of lessee, of course, it has to be an identified asset. And of course, the right to control the use of the identified asset should lie with the lessee. And what is meant by right to control the use of an identified asset? Number 1, right to obtain substantially all the economic benefit from the use of the identified asset should go to the lessee. Means whenever lessee is using that asset, the benefit of using the asset should be with the lessee. Number 2, right to direct the use should lie with the lessee. Means it is the lessee who will tell how and for what purpose the asset is going to be used. It is not the lessor who will tell how and for what purpose the asset is going to be used. At times, the kind of the use is predetermined. In the contract, it is written that you have to use the asset for XYZ purposes. So if the how and for what purpose the asset is used is predetermined, the lessor cannot change the operating instruction in future. If the lessor can change the operating instruction in future, it is said that the right to direct the use of the asset should not lie with the lessee, it is lying with the lessor. Okay. So 2 things. Number 1, right to get the substantial benefit from the use of the asset should lie with the lessee. Number 2, how and for what purpose the asset is going to be used, it should be lying with the lessee. The lessee will decide how and for what purpose the asset is going to be used. Okay. The supplier may have a protective right. The supplier may have a protective right. Okay. Supplier may have a protective right. For example, if I am having a car, I can say that, please don't drive the car more than 120 km/h per or more than 120 km/h speed. Or I can say that don't take this car out of India. Okay. So if I am using my rights only for the purpose of protection of my asset, if it is a protective right, then it is okay. Then you cannot say that for how and for what purpose is lying with the instructions are lying with the lessor, it is not lying with the lessor. The lessor may have a protective right, but the operating instruction should be lying with the lessee for having the right to control the use of an asset with the lessee. Okay. Let's discuss with the help of few examples. Company MNO enters into a 15-year contract with power company PQR. So company MNO enters into a 15-year contract with the power company PQR to purchase all of the electricity produced by a new solar farm. So this company MNO enters with a company PQR, and this company is purchasing all the electricity produced by this new solar farm. Means it is more like that this new solar farm is working for MNO. मतलब एक तरीके से MNO ने लीज पे लिया हुआ है, राइट? सारा का सारा जो आउटपुट है वो कौन परचेज कर रहा है? MNO परचेज कर रही है. PQR owns the solar farm and will receive tax credit relating to the construction and ownership of the solar farm. So who is the owner of the solar farm? PQR. And PQR will receive the tax credit relating to the construction and ownership. And MNO will receive renewable energy credit that accrue from the use of the solar farm. Who has the right to substantial benefit from the solar farm? Tell me. So in this case, the lease contract is for 15 years. And this MNO is getting a renewable energy credit, which is by use of the asset. The tax credit is relating to the ownership, not from the use, right? So PQR is getting the tax credit from the ownership of the asset. PQR is not getting the renewable energy credit from the use of the asset. Okay. And in this case, since the company MNO has the right to obtain substantially all of the economic benefit from use of the solar farm over the 15-year period, because it obtains the electricity produced by the farm over the lease term. The entire primary product is received by this company MNO. So company MNO is getting the output produced by the solar farm, and company MNO is also getting the renewable energy credit, that is the byproduct from the use of the asset. Okay. So the benefit from the using the asset is lying with the company MNO. Okay. So in this case, the company MNO has a right to control the use of the asset. What PQR is receiving, it is an economic benefit from the solar farm in the form of tax credit. And these benefits relate to the ownership of the solar farm, not the using the solar farm. The tax credit do not relate to the use of the solar farm and therefore are not considered in the assessment of the right to control the use of the asset. Okay. Second example. Company X enters into a contract with supplier Y to use a vehicle for a 5-year period. The vehicle is identified in the contract. Supplier Y, means lessor, cannot substitute another vehicle unless the specified vehicle is not operational. For example, it breaks down. Under the contract, customer X operate the vehicle, that is drive the vehicle, or direct others, means his driver, to operate the vehicle. For example, hires a driver. Tell me, in the first case, so it is not the case, it's something is written. Customer X decide how to use the vehicle. So first customer X operate the vehicle, okay, or passes the instruction to the driver that how to operate. Customer X also decide how to use the vehicle, of course within the contractual limitation. For example, throughout the period of use, customer X decide where the vehicle goes, as well as when or whether it is used and what it is used for. Customer X can also change these decisions throughout the period of use. Supplier Y prohibits certain use of the vehicle, for example, moving it out of the country, and modification to the vehicle to protect its interest in the asset. And supplier Y has prohibited that you cannot take this vehicle to the big boy toys who is modifying these vehicles. Okay. So you cannot modify this vehicle. Okay. Of course, these are the protective rights. So whether customer X has the right to direct the use of the vehicle throughout the period of the use, in this case, number one, it is identified asset. Number two, supplier cannot have a substantive right to substitute the asset. Number three, so who is taking the decision? Lessee is taking the decision, right? So right to direct the use of the asset is lying with the lessee. The lessor is only having a protective right. And here, yes, the right to direct the use of the vehicle throughout the period of use is lying with the lessee. So there should be two things. We have discussed one example of both in terms of right to control the use of the identified asset. Number one, right to obtain substantially all of the economic benefit from use of the asset. Number two, right to direct the use of the identified asset. These are the two aspects which are for right to control the use of the identified asset. So my dear friends, if I talk about these two important aspects, identified asset and right to control the use of identified asset. So we have discussed these two aspects in terms of Ind AS 116. If these two aspects will met, then only it will become an identified asset. It will become an leasehold asset. It will become a lease contract under Ind AS 116. Otherwise, it will become a service contract. In case of service contract, of course, you have to do the rental accounting. Now, what is a lease term, friends? A lease term is a non-cancelable lease term. For example, there was a 5-year lease contract in which the 3-year lease contract is a non-cancelable lease contract, and in the next 2 years, the lessee or lessor can terminate the contract without paying any penalty. But initial 3 year is a non-cancelable lease term. So non-cancelable lease term is 3 years. Okay. Second example, there is a 5-year lease contract. For the first 6 months, rent-free period is there. The first 6 months is a rent-free period. Okay. The first 6 months is a rent-free period for the fit-out period. Then the next 3 year is a non-cancelable period. In the last 18 months, the lessee can terminate the contract. Okay. So what is the non-cancelable period in this case? Non-cancelable period is rent-free period plus non-cancelable period, right? So 3.5 year is the non-cancelable period. Okay. Third, standard says that non-cancelable period of a lease is that period beginning from the commencement of the lease, which includes rent-free period, and it will be added by a optional renewal period if lessee is reasonably certain, and it will be added by optional renewal period also if lessee is reasonably certain that the lessee is going to renew that optional renewal period also. Okay. And it also covers termination period. If, for example, there is an optional termination period, let's say the first 6 months is a rent-free period, the next 3 year is a non-cancelable period, and the last 1.5 year is an optional termination period. But lessee is reasonably certain that he is not going to terminate. Why? Because lessee has done major leasehold improvement. So lessee is damn sure that he will utilize this premises for complete 5 years. In that case, what is my lease term? My lease term is equal to 6 months of RFP, 3 years of non-cancelable period plus 1.5 year of optional termination period, right? This is the definition of the lease term. Now coming to the lease payment consideration. Friends, in Ind AS 116, the word lease payment have been used from the lessee perspective as well as from the lessor perspective, right? So lease payment means lease amount. From the lessee perspective, it is an outflow. From the lessor perspective, it is an inflow. Okay. So what is the meaning of lease payment? Friends, there are 5 lease payment in terms of lessee, and there are 5 plus 1, 6 lease payment in terms of lessor. And what are these lease payment? Let me discuss. Lease payment is equal to fixed payment, including in substance fixed payment, minus lease incentives. Lease payment is equal to fixed payment. Fixed payment means, for example, I have entered into a lease contract for 3 years. I will pay 1 lakh rupees every year. So this is my fixed payment. What is in substance fixed payment? In substance fixed payment means, for example, I have a lease contract where I'm paying 1 lakh rupees every year, and there is an escalation clause of 10% every year. At the end of the year, the rent will be increased by 10%. So friends, sitting on today, I am aware that I have to pay, if I will continue with this contract, in the first year I'm paying 1 lakh rupee, in the next year I will be paying 1 lakh plus 10% of 1 lakh, which is 10,000. Okay. So I have to pay 1 lakh 10,000. In the next year, I have to pay 1 lakh 10,000 plus 10% of 1 lakh 10,000. So which is 1 lakh 21,000. So for the second year, 10,000, for the third year, 21,000. So in substance, since I'm aware today that I'm going to pay an escalation, in substance, it becomes in substance fixed payment. It becomes in substance fixed payment, right? Is that clear? Okay. Friends, second plus, so fixed payment including in substance fixed payment plus variable lease payment that depend on an index or a rate measured using a prevailing rate at measurement date. What does it mean? Friends, if there is a variable consideration, variable lease payment, right? That variable lease payment will also form part of lease payment, provided that variable lease payment should be dependent on an index or a rate. Index or a rate, what does it mean? For example, the variable lease payment, the lease payment will be increased to the extent of change in MIBOR, LIBOR, London Interbank Offer Rate, to the change in PLR, right? Or the variable lease payment will be increased in line with the increase in inflation rate, increase in the consumer price index, increase in the wholesale price index. So if the variable payments is depending on an index or a rate, in that case, it will form part of your lease payment. Okay. But if variable payment is depending on like some volume, like sales, performances, in that case, it will not form part of a lease payment. In that case, the variable lease payment has to be charged to the expense as in when it get accrued. For example, the lease payment is 1 lakh rupee per month plus 5% of the turnover. If it means in COVID time, if there is zero turnover, in COVID time, if there is a zero turnover, there is no lease payment. Okay. No variable lease payment. So such lease payment, which is depending on the turnover, depending on the profitability, depending on the quantity produced, this will not form part of the lease payment. Third, exercise price of the purchase option. Like in your lease contract, if the purchase option is given and you are reasonably certain that you are going to exercise, in that case, whatever exercise price is there, that exercise price will also become part of your lease contract. Fourth, penalty for terminating the lease. Penalty for terminating the lease. Okay. So the lease contract is for 5 years. And out of 5 years, 4 years is the non-cancelable lease period. And you know that you will terminate the lease in the last year. You will continue with the lease only for 3 years. So whatever penalties are there for terminating the lease, and you are reasonably certain that you are going to terminate, in that case, you will account for that termination penalty as a part of the lease payment. Fifth, residual value guarantees by the lessee. The lessor has leased the car to the lessee. Okay. And lessor told that you have to maintain the car in the good condition, right? And I'm giving you this car for 7 years. So I want you to keep into good condition and let's sign a contract where I want a residual value guarantee. Because if I'll give you the car and you will not maintain the car in good condition, probably my residual value will be impacted. So lessee says that not to worry. I'm giving a guarantee of 1 lakh rupee of a residual value. So whatever residual value guarantee is given by the lessee, that will also form part of the lease payments. Okay. For lessor, all these will become part of the lease payment, means inflow. Okay. So for lessor, it is an inflow. Plus, since this asset belongs to the lessor, so residual value guarantee given by the lessee or residual value guarantee given by the any other party other than lessee or a party related to the lessee, a party related or unrelated to the lessee, if that party is giving a residual value guarantee, that will also be taken into consideration. For example, you are aware that in case of property, plant and equipment, for computing depreciation, we are estimating the residual value. What is that? That is the kind of a guarantee or kind of a estimate which we are taking. While it is an unguaranteed residual value, it could be a guaranteed residual value also, right? I hope this is clear to everyone, friends. Is that clear to everyone? So why it is important? What it impacts? If it is a lease payment, how come it is impacting? It is impacting your right of use asset calculation. It is impacting your right of use asset calculations. Okay. So let me quickly show you one of the example. Okay. And I'm sharing my Excel file. I hope my Excel file is visible to everyone. This is the lease payment. This is the lease payment, which is fixed lease payment from the lessee and lessor both. In substance, fixed lease payment. If there is a lease incentive, it has to be reduced. If there is a variable lease payment, depending on the index or a rate, it has to be added. Exercise price in case of a purchase option, it has to be added. Termination penalties, it has to be added. Residual value guaranteed by the lessee, it has to be added in both. And residual value guaranteed by the other party, related or unrelated to the lessee, it is form part of lessor lease payments only. This will become a lease payment. Now let's take an example. The lease contract is 5-year, lease payment is 10,000, escalation clause is 10%. Exercise price at the end of the lease term is 15,000. Exercise price is given, escalation clause is given, residual value guarantee is given. Assuming discount rate 10%, determine lease payment for every year in the books of the lessee. So what is my lease payment every year? My fixed lease payment is 10,000. What is my in substance fixed lease payment? The escalation. Second year 11,000, third year 12,100. So these are the escalation. So this become my in substance fixed lease payment. What is my lease incentive? 0. What is my variable lease payment? 0. What is my exercise price? Exercise price will be payable at the end of the lease term. इसीलिए 5 year के end पे आया है. Termination penalty no. Residual value guarantee again at the end of the lease term 10,000. So this is your total lease payment. 10% is the discount rate. What is my present value factor? These are the present value factor, and this is the present value. What is my right of use asset? The present value, the aggregate present value is my right of use asset. What is the entry? Right of use asset account debit to leasehold liability. Okay. This is the lease payment. And friends, in case of interest rate, what is the discount rate? So the discount rate has to be used. The discount rate which belongs to the lessor. The lessor incremental, the lessor IRR. The internal rate of return of lessor should be used for discounting the future lease payments for arriving at right of use asset and lease liability. Sir, but normally how come I will be able to know that what is the lessor IRR? Yes, that is why standard says that, okay, if you are not aware about the lessor IRR, you can use the lessee's incremental borrowing rate. You know what is your incremental borrowing rate? It means, for example, there is a 5-year lease period. If you go to the bank and ask for a 5-year loan, what rate bank will charge you? So that is the discount rate. That is the incremental borrowing rate. Normally, what companies do, they took the quotation from the bank, right? And that rate of interest they are using for discounting their lease liability. Okay. Is that clear? Is that clear to you guys? Yes. Okay. Friends, just allow me a minute. I have to just on my charger. Yes. I hope I'm audible now. I'm audible and visible both. Yes. Yeah.
Yes, sir, audible.
Now moving next. Initial direct cost. Friends, initial direct cost. For example, when you are entering into a lease contract, you end up paying so much of cost. For example, commission you are paying to the dealer. Legal fee you are paying to the lawyer for drafting an agreement. The lease documentation cost, right? At times you are paying to the existing tenant also, right? So there are existing tenant and they don't want to remove, they don't want to move out. So you are paying a compensation to them. So all these expenses has to be added back to the right of use asset. Okay. So these initial direct cost can be capitalized in the right of use asset. Okay. So friends, what is the total of right of use asset? Right of use asset is equal to present value of the lease liability. Means present value of future lease payment. For example, today you have entered into a contract, you are using the asset, and now you will pay the lease rental for the next 3 years. So what is my right of use asset? Right of use asset is equal to present value of future 3-year lease rentals. Right? This is my right of use asset. What happens if the lessee has already paid some amount in advance? For example, on the commencement date, the lessee has paid some money, or the lessee has paid an advance before commencement date. So whatever advance lessee has paid before signing of the contract, what accounting entry lessee must have passed? Lessee must have passed advance money paid to lessor account debit, advances to lessor account debit to bank. Now lessee will add that right of use asset debit to advance. Okay. So it will become part of right of use asset. If the money has given on the date of commencement, then the present value will be equal to the same value. जो उस दिन पेमेंट हुई है उसकी प्रेजेंट वैल्यू फैक्टर 1 ही होगा ना, राइट. ओके, इनिशियल डायरेक्ट कॉस्ट, दिस विल बी एडेड टू द राइट ऑफ यूज एसेट. Dismantling provision, so you have entered into a leasehold land. Okay, the leasehold land is for a period of 30 years and you have installed a factory. The company has installed a factory. The lessor told that whenever the lease contract will end, you have to give my land in the same condition in which I have given it to you. So it means after 30 years, there will be some dismantling cost, decommissioning cost, site restoration cost. So whatever is the estimate of that cost after 30 years, we will do the discounting. We will take it to the present value, and that present value of the future cost that will be added to the cost of right of use asset. What is the accounting entry? Right of use asset account debit to provision for decommissioning or provision for right restoration or provision for dismantling, right? So right of use asset is equal to present value of future lease payment plus any advance payment made on or before commencement date plus initial direct cost plus provision for decommissioning or dismantling. Right? Then subsequent measurement. So my dear friends, subsequent measurement is at cost model or revaluation model. It is just like a PPE. Okay. What it says that if you have opted for a cost model, you have to depreciate your right of use asset on a straight line basis. Okay. What is the life of the asset? The life of right of use asset is equal to lease term. Okay. Life of asset is equal to lease term. Okay. And you have to depreciate. And if there is any impairment, you have to charge impairment also. If you are opted for revaluation model, then you have to revalue your right of use asset. Okay. And whatever is and how come you revalue? For example, you have entered into an agreement for a property property leases contract. The rental is 1 lakh rupees per annum. And it was decided in the contract that whatever increase will be there, it will be negotiated after 3 years. But after entering into the contract, the prices of the property has significantly shoot up. So after effect is the rental has also shoot up. So had I entered into this property agreement, now I would have to pay 2 lakh rupees rental every year. But I have entered earlier, so I am paying 1 lakh rupee, right? So it means the right of use asset valuation has already increased. So if I opted for revaluation model, I can revalue this. But the only thing is, if the company has a PPE also, for example, the company has its own building, it is a PPE. If the company is revaluing the building, right? In that case, if the company has a leasehold building, that leasehold building is also going to be revalued. Leasehold building means right of use asset pertaining to the leasehold building. Clear है? मतलब अगर मैं अपनी एसेट को रिवैल्यू कर रहा हूं, तो अगर मेरा कोई राइट ऑफ यूज एसेट है विच इज रिलेटेड टू द सेम क्लास ऑफ एसेट, तो मुझे अपने राइट ऑफ यूज एसेट को भी रिवैल्यू करना पड़ेगा, और वाइस वर्सा आल्सो, राइट? व्हाट इज माय लीज लायबिलिटी? माय लीज लायबिलिटी इज इक्वल टू प्रेजेंट वैल्यू ऑफ फ्यूचर लीज पेमेंट्स, and which is increased by the interest charges and which is decreased by the actual lease payment. So one of the participants have asked me, sir, let's say I have entered into a lease contract and I have paid the entire money in advance. So in that case, what is my right of use asset and what is my lease liability? So if you have paid entire money in advance as of today, so the present value factor is 1. So whatever you have paid, right of use asset will be debited. Since you have already paid, there is no lease liability. Okay. Or alternatively, what entry I will pass? Right of use asset to lease liability. Since you are paying today only as per contract, for example, so my right of use asset debit to lease liability with the same amount means full value. Then your lease liability to bank. So on the commencement date, only right of use asset will exist, and whatever is the lease period, it has to be depreciated over the lease period. Okay. Is that clear? So this is the right of use asset, subsequent measurement, lease liability, subsequent measurement. And what about P&L? So friends, about P&L, so basically in P&L, what will go? Depreciation on right of use asset will go. Interest expense on lease liability will go. Okay. Then variable lease payment that are not included in the lease liability. Which variable lease payment? Which one? the variable lease payment, which was not depending on the index or a rate. For example, a variable lease payment, which is depending on the sales volume, performance, quantity produced, right? So those variable lease payment will be charged to P&L as and when it get accrued. Fourth, impairment. If there is any impairment of the right of use asset, for example, you have entered into a contract to use a property, but since you are not able to use the property now, for example, in case of telecom companies, they are installing tower on the leasehold premises. Some neighbors have filed a complaint to the municipality that this tower has a hazardous, chemicals, hazardous gases, and it is impacting our health. Municipality has seized that premises, seized that tower. So while the company is paying a rental, but the company is not able to get the future economic benefit. So which is an external indicator, which indicate that you need to impair your right of use asset. The leasehold liability will be there, but you need to impair your right of use asset. Okay. Talking about the subsequent measurement, lease modification. Friends, what happens, for example, subsequently when you modify the lease? And what is meant by lease modification? Lease modification means a change in the scope of a lease or a change in the consideration of a lease. Means your scope is increasing or your consideration is changing. For example, you have entered into an agreement for 10,000 square feet of space for 5 years. After end of 2 years, you have decided to increase 5,000 square feet of the space, right? So this is a change in the scope. So whenever the scope is increasing or decreasing, of course, it's a lease modification. Earlier, the rental was 1 lakh rupee per month, but this was the agreed rental. But in the market, the rental has shoot up like anything. So now the landlord is pressurizing that please increase my rental, otherwise please vacate my premises. So in this case, there is a change in the consideration. So whenever there is a change in the scope or a change in the consideration, which was not formed part of the original terms and condition, this will be tantamount as a lease modification. And in case of a lease modification, you have to remeasure your lease liability. You have to remeasure your lease liability and you have to give the impact to the right of use asset. You have to increase or decrease the right of use asset accordingly. Is that clear? I hope that is clear to everyone, friends. So this is the chart which I have prepared, new lease contract. So if there is an increase in scope and increase in scope is in line with the increase in consideration basis fair market rental, then it's a new lease contract. What does it say? For example, I have entered into a 10,000 square feet of lease rental space and I am paying 50 rupees per square feet. After 2 years, I need 5,000 square feet more. And this 5,000 square feet, the lessor has given to me again at 50 rupees per square feet. What does it mean? Means the change in the scope is in line with the change in the fair value. Okay. Means if my scope is increasing in line with the market or in line with the fair value, my consideration is also increasing. So in this case, if the addition in the scope is in line with the fair market rental, it will be considered as a new lease contract. Means I will not disturb my 10,000 square feet lease contract accounting. I will do this 5,000 square feet lease accounting separately. Second example, when there is an increase in scope, but the consideration is not increasing as per the market rental. For example, I have negotiated and I have got the additional 5,000 square feet at 30 rupees per square feet. It means it is not in line with the market rental. Or there is only increase in the lease term, or there is a change in consideration. In these three cases, I need to remeasure my lease liability at modification date, and whatever increase or decrease is there, I have to adjust my right of use asset. Number three, de-recognize lease liability and right of use asset partially, impact in P&L, right? For example, there is a decrease in lease term. For example, there is a decrease in scope. There is a decrease in lease term and there is a decrease in scope. So in case of, for example, the initial lease term was 10 years. Now it was revised to 6 years. It means you have to partially de-recognize the lease asset and the lease liability, right of use asset and the lease liability. Or there is a decrease in scope. 10,000 square feet now become 5,000 square feet. So you have to partially 50% you have to derecognize your ROU asset and the lease liability. Okay. So a question is, a lease term is extended by 2 years, but no new underlying asset is added. Is this a separate lease? What is the appropriate accounting treatment? Very good question. So this will fall into the second criteria. Second bucket. What is the second bucket? For example, the initial contract was for 5 years for 1 lakh rupees lease rental every year. Okay. So on the date of commencement, what we did on the date of commencement, we have computed the present value of 1 lakh rupees payable for the 5 years. And we have computed the right of use asset and lease liability. After 3 years, it was decided that the lease has to be extended by 2 years more. So now instead of remaining 2 years, it is remaining 4 years. But मेरे पास lease liability कितनी बची होगी for the remaining 2 years? So I will remeasure my lease liability. So now I will remeasure that what is the present value as of the end of the 3rd year for the remaining 4 years. So whatever is the present value of lease liability, I will compare with my existing lease liability. Of course, it will increase. Okay. And whatever is the increase, I will add that increase to the right of use asset also. So accounting entry is right of use asset to lease liability. To cut a long story short, it will not be a separate lease. It will be a modification. Number 2, the accounting entry will be the revised lease liability will be computed, and the difference between the existing lease liability and the revised lease liability, that has to be credited, and the same amount has to be debited in the right of use asset, right? So friends, there is no difference in the, there is no major difference in the lessor accounting, right? So lessor accounting is typically same. If I talk about the Ind AS 116 for lessee accounting, there is no concept of finance lease and operating lease, single lease model is there. But for lessor accounting, the separate concept of operating lease and finance lease exists. It is same like accounting standard 19. When the risk and reward is transferred, it will be considered as a finance lease. If not, it will be considered as an operating lease. It is the same accounting in AS 19 from the perspective of the lessor, right? The second question is, a lessee construct a warehouse on leased land with a 10-year lease. The useful life of the building is 30 years. How should the ROU asset and lease term be assessed in this case? Should the asset be depreciated over 10 years or 30 years? So whatever is the leasehold improvement, for example, in this case, the important aspect is, since the leasehold land is 10 years, right? So do we have an option to renew the contract? If we have the option to renew the contract, of course, we want to renew the contract, right? We have a reasonable certainty to renew the contract because we have installed a building, we have constructed a building. So in that case, what we will do, for example, the first option of renewal is there. So in that case, we will conclude that my lease term will be 20 years. And if my lease term will be 20 years, of course, we will depreciate the building over a period of 20 years. The shorter of life of the asset or life of the lease term, whichever is shorter, that will be the life for the purpose of depreciation. Okay. Any other question? So friends, lessor accounting, I'm not discussing lessor accounting, right? Yes. How does a company assess whether renewal or termination options are reasonably certain to be exercised? Friends, in accounting, in Indian accounting standard 116, there are some guidances which are available, which says that, for example, you have done a major leasehold improvement, right? If you have done a major leasehold improvement, it means you are going to renew the optional renewal period, or you are not going to avail the optional termination period. Number 1. Number 2, the contract says that at the time of renewal, you will get a benefit of 25% or discount if you will renew the contract. Of course, it is highly certain that you are going to renew that, right? Third, as one of the participants have asked, that on a leasehold land, the building was constructed which has a life of 30 years, which itself indicate that the intent of the company was to stay longer on this leasehold land. It is not a shorter. So there are some kind of indicators which are there. The examples are given, but these are not exhaustive. These are indicative, right? So these kind of examples, indicators will tell you that whether the company is reasonably certain to opt for a renewal period or reasonably certain to not opt for a termination period. A lessee enters into a 13-month lease with a termination clause exercisable by either party without penalty after 11 months. Can this lease qualify as a short-term lease for recognition exemption? Answer is, again, you need to look at the lease term is 13 months, but after 11 months, there is a termination clause exercisable. Right? If lessee is reasonably certain that the lessee, see, from the lessee perspective, right? If the termination clause is given to the lessee, right? So normally, lessee's benefit is to continue with the contract on the inception of the contract. So in this case, if the termination is on the lessee, so of course, you need to look at whether you are going to terminate or not, right? So if lessee is reasonably certain that lessee is not going to terminate, then it is a long-term lease, it is not a short-term lease. But if lessee is reasonably certain that he is going to terminate, then of course it becomes a short-term lease. If lease agreement includes cleaning and maintenance services along with the use of space, should the lessee separate lease and non-lease component? So let me discuss this concept. If I talk about the lease and non-lease component, right? If I talk about the lease and non-lease component, so in Ind AS 116, there is a practical expedient which is available. And what it says, for example, you are paying a lease rent of rupees 1 lakh. And you are also paying 15,000 rupees for cleaning and maintenance services. Okay. So now there are two options which are available. Option number one, you can separate your lease and non-lease component, right? But for example, if it is separable, then it is okay. But for example, you are paying a rental of 1,15,000 and it is not clear what pertains to rent and what pertains to cleaning and maintenance services. Then standard has given you a practical expedient where whatever you are paying, you can consider that as a lease rental and you are not required to do any non-lease component accounting. So both the options are available. Okay. Yes. But if you want to separate, what you can do, what is the fair value? What is the fair value of the market rental and what is the fair value of the cleaning and maintenance services, right? So on the basis of the fair value, you can allocate the consideration. For example, you are paying 1,15,000 and the fair value of the rental is, let's say, 1 lakh rupee. Fair value of the cleaning and maintenance is 25,000 rupees. So you will allocate 1,15,000 rupees into the ratio of 1 lakh is to 25,000. Okay. Next question is, how does the impairment assessment of ROU asset under the Ind AS 36 specifically applies to lease asset? My dear friends, there are three standards. So there are three ways by which impairment can happen. Impairment can be taken care by the standards. Impairment on the financial asset, impairment on the non-financial asset. If there is an impairment on the financial asset, Ind AS 109 will be applicable. If there is an impairment on the non-financial asset, Ind AS 36 will be applicable. Except if there is a specific standard which takes care of impairment, for example, inventory. So impairment on inventory is taken care by Ind AS 2, which says that inventory has to be measured at cost or NRV, whichever is lower, right? But to cut a long story short, Ind AS 36 is applicable. Ind AS 36 is applicable to the non-financial asset, right? Non-financial asset. So in terms of right of use, for example, in the COVID time, the companies which were entered into the long-term lease contracts, okay, and the work from home culture was started and the companies started vacating the premises. Means the companies were not able to use the premises. That is number one. Number two, the rental has become too low, right? Rental has become very low, which indicate that since the company has entered into the contract 3 years back, that is why their applicable rental is, for example, 5 lakh rupees per month or 100 rupees per square feet. But due to COVID, now these premises are available at, let's say, 50 rupees per square feet. It means the right of use value is not in line with the market value, recoverable value. In that case, this right of use asset, if the entity is not able to get the future economic benefit, if in the market the rental has become very low, right? So in that case, the right of use recoverable value has to be computed and it has to be impaired. Okay. The next question is, A lessee incurs 50,000 in legal and consultancy fee to negotiate a lease. Should these costs be capitalized or expensed, my dear friends? Question number 7. The standard has specifically called out. It has specifically said that if you have paid any fees for negotiating a lease, it is just like a sunk cost. Because when you are negotiating, when you have paid for negotiation, it was not clear whether you will go or you will not go with the contract. So negotiating expense on negotiating a lease is outside the purview of this contract. A lessee receives 3 months of rent-free period at the beginning of a 5-year lease. How should this be accounted for in measuring the lease liability and right of use asset? Should the rent-free benefit be spread over the lease term? Of course, yes. Right? Of course, yes. Let me share with the help of an example. Okay. And let me share my Excel file quickly. Very, very good question. Assuming there are 3-year lease rental, assuming same example I'm taking, 3-year lease rental is there. The first year is the rent-free period. First year is rent-free period. Okay, it is RFP. This is the 3-year lease contract. Okay, instead of 5-year, I'm taking 3-year. Now, what is my present value factor? What is my present value factor? Doesn't applies to this. Okay, I'm sitting today, but or let's say apply this present value factor 1 divided by 1.1. Then what is the next year present value factor? Divide by 1.1, divide by 1.1. So in the 3-year period, my first year is a rent-free period. My second year and third year is a rental period. In the total contract period, I have to pay 20 lakh rupee. And what is my present value? What is my present value? This multiplied by this 0 and so on and so forth. My present value is 15,77,761. So what is my P&L impact? What is my P&L impact? मेरा P&L impact क्या होगा? What is my P&L? My P&L in terms of my depreciation and my interest cost. P&L क्या होना चाहिए मेरा? Year 1, 2, 3. My depreciation is this divided by 3. Every year I will have this amount of depreciation. What is my interest cost? Let me prepare my lease schedule. Quickly, I'll prepare my lease liability schedule. Okay. What is my opening balance in the year 1? So it's year 1, 2, 3. What is my opening balance? My opening balance is how much? My opening balance is 1577. What is interest cost? Assuming 10%, जिस पे मैंने discount किया है. What is my payment in the first year? Rent free period 0. What is my liability? What is my liability? Sum of these 3. This will become my opening balance. What is my interest cost? What is my payment? 10 lakh rupees. What is my liability? This one. This is my opening balance. 10% is my interest cost. My 10 lakh rupee is my payment, and this will become 0. So what is my P&L impact? My interest cost would be in the first year, it is 157, so on and so forth. What is my total P&L impact? So you can see even in the first year, the rent-free period was there, but still we have charged a depreciation of what? A depreciation of 525 and an interest cost of 157. These are the P&L impacts under Ind AS 116, right? In case of rent-free period. I hope now you have understood this accounting. Whether this accounting is clear to everyone? Yes. Question number 9, please explain the accounting of sale and leaseback transaction with illustration. So, my dear friends, this sale and leaseback transaction is not a simple item. It's a very complex item. So let me give you the concept. What is a concept? In case of sale and leaseback under Ind AS 116, right? You need to check, because in Ind AS 116, there is a concept of right of use asset. Okay. Let's say I am having a property. Okay. So I am the owner of a property and the value of the property is, for example, 10 lakh rupee. For example, the value of the property is 10 lakh, right? And the life of the property is 20 years. And I have I have sold this property with a condition that you have to lease this property back to me. So I am the seller who has become the lessee. Seller become the lessee and the buyer become the lessor. This is a sale and leaseback transaction. And this lease contract says that I will take this property on a lease for 12 years. For 12 years. It means out of 20 years of the life of the property, how much right I am keeping? I am keeping a right of 12 years. Means I will use this property for 12 years as a lessee. So it means I am keeping a right to the extent of 60%. To the extent of 60%. So how much right I have sold? How much right I have sold? I have sold a right of how much? 40%. So friends, in this case, Ind AS 116 says that in case of sale and leaseback transaction, whatever right you have kept, you have to create a right of use asset. Whatever right you have sold, for that portion, you need to recognize a profit or loss as per Ind AS 115. Okay. How do we account for the next question? How do we account for refundable security deposit given at the time of entering into lease as per Ind AS 116? My dear friends, the refundable security deposit is a financial instrument. It's a financial asset. You need to discount this financial asset. For example, the lease contract is 3 years. Lease contract 3 years. Contract is 3 years. Okay. And we have paid the refundable deposit of 1 lakh rupee. Okay, the discount rate is 10%. This refundable deposit which I have paid today, I will recover it back after 3 years. Okay, so what is the present value? What is the present value of this 1 lakh today? I mean to say that whatever 1 lakh I will recover after 3 years, what is the present value? The present value is 1 lakh divided by 1 plus 10% to the power 3. This is the present value. What is the accounting entry I need to pass? So to bank, I have paid today. How much I have paid today? I have paid 1 lakh rupees today. But the present value of the security deposit is 75,131. So security deposit at present value. Security deposit debit. Debit. This is credit. This is debit. Right? So debit is only 75,131. Debit is 75,131. Credit is 1 lakh. Where the difference will go? The difference will go to the where? Where the difference will go? The difference will go to the right of use asset. Okay, the difference will go to the right of use asset. So this 24869 will be depreciated over 3 years and interest income is going to be charged on 75,131 so that it will become 1 lakh at the end of the 3rd year. Okay. So this is the accounting for refundable security deposit. So thank you all the participants and I am glad that you have asked so many important questions. Thank you ASB also for flagging these questions and I have responded to each and every question which came to me. Thank you so much and I hope you have understood the intricacies of Ind AS 116. You have been able to understand why Ind AS 116 came into picture, why IFRS 16 was notified, what is an identified asset, what is meant by substantive substitution right, what is meant by right to control the use of an asset, what is the lease payment, what are the lease term, what are the lease payments, right? How this right of use assets and lease liability is going to be initially and subsequently measured, right? And we also discussed the lease modification, the lessor accounting, the sale and lease back, and the other aspects in terms of Q&A. Thank you so much. Yeah, over to you, Shalini ma'am or Meenal ma'am.
Thank you, sir. Thank you so much for delivering such a wonderful session. Thank you, Shalini ma'am. Thank you, Sanjeev sir, and whole team of Accounting Standard Board organizing such a wonderful webinar. Thank you, sir. Thank you so much.
Thank you, ma'am. Thank you so much. And thanks to the entire ASB team and the participants as well. Thank you.
Thank you. Yes, sir. Yes, sir. Yes, sir.